What is up, everybody? Welcome back to a special edition of Benzinga Live. We are going to get right into an all-access here in a few minutes with a very cool biotech company, BioRestorative. I've got the CEO Lance Alstott hanging out backstage. First things first, though, hope everyone had a great time last night watching the Super Bowl. Of course, Kansas City Chiefs edging it out over the Philadelphia Eagles there at the end. Although in controversial fashion with a late penalty that a lot of people, wish, especially a lot of people in Philadelphia, wish was not called. But again, so we are going to start the show today, starting a little bit early, talking about biotech, talking specifically about stem cell therapies. We are going to get into the specifics there. And then following that, we've got a busy day. Of course, CPI report coming before the open tomorrow. All eyes on Wall Street will be watching this inflation number because if it comes in hotter than expected, oh boy, we could be in trouble. Market could be going down from here. But on the flip side, if that number comes in line or lower than expected and it shows that inflation is continuing to fall, I think the market could respond very well to that. But alrighty, y'all. I think without further ado, we should go ahead and bring on our guest of honor today. Again, CEO of the ticker is BRTX. Good morning, the Crow. Hope everyone, again, if you're just joining us, I see a lot of people are just now joining us. From live trading, we are doing a quick all access this morning. The ticker is BRTX. BioRestorative, we've got the CEO Lance Alstott hanging out backstage. We're going to be talking some stem cell therapy, getting into biotech, and then we will get into our normal Benzinga Live programming. But without further ado, let's go ahead and give Lance Alstott our very special Zinger Nation welcome and bring him on the stream here. Producer AT. Mr. Lance Alstott, how are you doing today? Happy Monday. Welcome to Benzinga Live. Welcome to Benzinga All Access. How are you doing?
I'm doing great. Aaron, thank you so much for the great introduction. Speaking of the Super Bowl, I was a former football field goal kicker. I kicked at the Pro Bowl one time at halftime and for $1 million. And anyone that wants to Google my name can check that out. 1997. I can't believe Gronk missed that field goal during that commercial. I would have loved to help him, and if I did, maybe he would have had a better chance. But thank you again for the introduction.
Yeah, that's some great color. I mean, I'm sure then if you were your former field goal, were you a kicker outside of just that one kick for $1 million?
Just like Gronk, I entered a contest, and I was wheeled out at halftime at the Pro Bowl in 1997. And put the ball down and kicked a 35-yard field goal for $1 million for a Hershey contest. So I love watching the Super Bowl. It keeps me up late at night, but last night was a great game. And in true kicker fashion, that was the way they ended the game last night. So it resonated.
Yeah, I'm sure it did. I mean, special teams were very important throughout the game. Of course, the Chiefs had that big punt return too. So actually, and we'll get straight into the business after this. But one of my best friends up here in Detroit, I grew up with him. We actually lived together. Is the punter for the Detroit Lions. So I'm very in the know when it comes to all things special teams, kicking and punting, because he was a field goal kicker. For when we were growing up, I thought he was going to go pro to be a kicker because when we were like 13, he was kicking 40-yard field goals in games. But as we got older, his accuracy was all over the place, but he's still got a strong leg, so now he just punts.
Well, if you want a good laugh, and this goes out to your investor friends out there as well, feel free to Google my name, and you can look and you can tie it to the Pro Bowl and some of the fun activities that went along with that.
Okay, maybe later on the show we'll just do that instead of our normal program.
You'll show the kick. You'll pull it up off of YouTube or something.
Yeah, we'll do that. All right, Lance. So let's get into it. Tell us a little bit about the company, what it is you guys do, kind of how you guys started, and everything there.
Sure. Well, we're a NASDAQ listed publicly traded cell therapy company. We operate two primary platform technologies that are very well protected with intellectual property and operate within multiple applications in large billion-dollar market opportunities. So what we're talking about here is musculoskeletal health, specifically spine. We have an approved clinical trial through the FDA to initiate a phase 2 clinical trial for chronic lumbar disc disease, and we can talk a little bit more about that. Our secondary platform technology is brown fat. So you have white fat and brown fat in your body. Brown fat happens to be a very interesting and energy producing cell therapy. And we use that in connection for huge markets like obesity and type 2 diabetes, which are the indications that we'll be pursuing in connection with that platform. Obesity right now is hot. It's on fire. You're seeing some of the large cap pharma companies with pharmacological solutions like Ozempic, such as Novo Nordisk. So this is a very timely industry where I think people are ascribing a tremendous amount of attention to it from an investor dollar perspective, as well as the general demographics in this country, as well as the rest of the world, are extremely favorable for really important solutions for obesity and type 2.
Got it. Yeah. And I mean, I'm sure, guys in the chat, I'm sure most of you guys out there, if you have not, suffered from some sort of back pain, you probably know someone who has or know someone in the family. So it seems like to me, Lance, both of these kind of things y'all are going after, both back pain and obesity, are just two huge addressable markets. Is that kind of how those were selected?
Well, in fact, there's been some prior human experience using our technology and our products, and that human data is the basis for which we've moved forward and created this meticulous protocol for entering a phase 2 trial. Initially, when we sat down with the FDA, we used this data along with animal data that we had sponsored, and the FDA basically fast-tracked us from a phase 1 to a phase 2 in order to pursue this indication. So what we're talking about is really taking the best that the body has to offer. It's an autologous product, which means we are taking the best cells that you have, and in layman's term, we're basically bringing it back to our lab, which is ISO certified, 7 clean room certified by the FDA. We supercharge these cells in an environment called hypoxia, which really conditions those cells to mimic the environment of this harsh disc where it's going to be going. So your disc is, low pH. It's got no circulation. There's no blood flow. That's why when you get injured, it takes so long to actually heal. And that's why, people take opioids or epidurals or steroids. Those really just mask the pain. What we're trying to do is take those cells, condition them to be the best cells they can be and to work in your body, and then inject them directly into the nucleus of the disc under fluoroscopy so that that disc can really remodel and heal the way it should be. And I'm not looking to turn you back into your 18-year-old self, but we want to get you healthy enough that you were operating prior to when that injury might have occurred. And it's a huge market. There's over 65 million people in this country alone with chronic lumbar disc disease.
Yeah, I know even one of my buddies and coworkers here is out of the office right now because he's got a bulging disc, something, and he's like 23, right. 24. So these things, I think, and especially right now, there's been a lot written about and made about how the population is aging and healthcare, it's expected to. So I think a lot, if anything, that market is just going to continue to grow.
But Lance, it's not going to discriminate against your age or your gender or your sex. You can be 18 years old and you can be an athlete and hurt yourself in that regards, or 60 years old. And just through the degenerative process, it's really just not a matter of if, it's a matter of when it's going to affect you.
Got it. So Lance, I want to take a step back for a second, just because our audience and myself, we're like retail investors. I'm not the smartest person in the world. Can you just describe to me what exactly kind of stem cell therapy, in layman's term is, and how it differs from more traditional, types of therapies?
Sure. So, for example, to use our product and this one program that we're talking about, we're using autologous cells, autologous mesenchymal cells that we harvest from the patient. So you're a patient, you have chronic lumbar disc disease, you go to the clinic, and we extract those cells through a bone marrow aspiration, which is a very minimally invasive, painless procedure. We don't take a lot of bone marrow from you because we culture it and expand it when we bring it back to the lab. So the procedure itself is very innocuous and it takes only about 11 or 12 minutes. We'll take those cells, we'll bring them back to our lab, we'll culture and expand them under this low oxygen tension process called hypoxia to really condition it. So it's like if you're an athlete, you want to train for the big event at an altitude so that if you perform at sea level, you'll be conditioned to perform at a higher level. So we're really training those cells. Remember, we're talking about your own cells. They're living, breathing organisms. It's not an off-the-shelf cadaver cell that we're looking to implant. We're taking your own autologous stem cell, we're conditioning it to be the best it can be and putting it in a place where your body just can't repair on its own because how harsh those environment really is. So we're seeing a lot of advances in autologous cell therapy. We're seeing it in cancer, for example. CAR T has really been the driver for autologous cells versus the allogeneic solutions that are happening in cancer. And primarily the reason why autologous is the most successful is not only because patients prefer their own cells because of a bioenvironmental match that we believe happens, but the efficacy is driving the results. And despite the cost and despite the prices these companies are charging for these autologous solutions, the efficacy is really what's driving the need.
Got it. Yeah, and I mean, it's so interesting because stem cell now at this point has been around for what, a couple decades, 25. I don't know exactly how long. And it's one of those things that I think when the science first came out on, or people first started writing articles about, it seemed like people were like, oh, this is going to be the thing that
Sure.
ends up curing cancer and doing this and doing that. And then it's when those articles come out, obviously the science is years down the road. It takes a lot of time to do this, and I think now we finally are seeing a lot of these things kind of start coming to fruition. Obviously, in your
Yeah.
case with is that fair? Is that accurate? Is that like the past
I think there's two things going on there. That's great insight, by the way. And I think it's taken some time for stem cell therapy to really become more center stage. We're starting to see it now. So, for example, the big hospital systems that have historically really been focused exclusively around surgical intervention, they're realizing that some of this surgical intervention, and what we're talking about here are discectomies or fusions or motion preservation devices, they're really not working. These surgeries are being revised more than 30% of the time. So the doctors are being asked to do all these diagnostics for the patient to justify the need for these surgical interventions, because the insurance companies are starting to push back and not pay for them as much as they were before. These procedures can be up to $200,000 per procedure. So what we're seeing now is the big hospital systems, they're gravitating to more of an interdisciplinary approach using stem cell therapy and regenerative medicine as a basis to understand alternative solutions. So that piece of it is really driving the attention of stem cell therapy. We're seeing companies now with actual data that are driving the success of stem cell therapy through efficacy results versus alternative standards of care. And we're seeing companies like ours take the appropriate pathway, i.e. go through the FDA and not through a practitioner that just wants to explore with stem cell therapy bedside and do it in an unregulated fashion, because I think that's what really gave the industry in the onset of the space a little bit of a, I don't want to say a bad name, but it provided, questions as to what was really going into that body, what were they doing with those stem cells, how are they handling them, and under what levels of regulatory compliance were they doing it. So now companies like us have taken that with the FDA in collaboration, put together these meticulously written protocols, and really we understand from a quality, from a quantity, and from a release criteria what it is that we're doing and what we're putting into the body. So from a regulatory standpoint, I think there's been much greater governance and control. And
Got it. Thank you.
That's driving acceptance.
Right. That helps explain, I think, some of the, more prevalence you're seeing in stem cells, stem cell like therapies in the past, few years compared to when you're looking at 10 years ago or whatever. So one thing I find fascinating about your company is that it's you guys were founded by researchers and scientists, not like businessmen or anything like that. Is that correct?
In the past, that's how the company was originally founded, and we in-licensed certain technologies in order to pursue our programs, and some of which have been built homegrown. So, for example, our brown fat was a homegrown technology that we built, and our researchers and our scientists are the inventors of the intellectual property around those programs. So, yes, that is true. And I think combining the researcher, the scientists, with the business folks, the people that are familiar with running and organizing, large healthcare systems, as well as capital markets environments, we really have the best of both worlds under one roof.
Yeah, I think that's important. At least like for me or someone as like a prospective investor looking at something and seeing, okay, like is how this company's kind of, I guess, like origin story founded. I like to see, at least in the biotech space, really like people with experience in medicine, doctors, researchers, as opposed to someone just coming from Wall Street and starting up like a biotech company.
I think, Aaron, I think that's a really important point, and you need both. I think you need someone that has the experience, especially in this domain. For example, what we're talking about here is really cell therapy. So we have Francisco Silva, who is my partner and the vice president of research and development, and he is probably one of the most world-renowned, well-respected stem cell pioneers, and has done a tremendous amount of work translating stem cell therapy into large indications, bringing products to market, commercializing products, selling companies to large strategics as well in connection with stem cells. So, and then of course I'm more of the Wall Street type, where I started my career in the global M&A group at JP Morgan, ran life science investment banking at B of A Merrill for 10 years, and then eventually started my own fund. So I've invested in a whole host of different healthcare opportunities. This one happens to be the most exciting that I've been involved with in the last 20 years. And I'm really committed to making sure that this works.
Got it. So, Lance, I don't know if I know we're kind of going a couple minutes over here, so if you've got to run, just let me know. But I wasted some of our time talking about football too much. But what is the next year, 2023, kind of looking out, maybe even a little bit beyond that? What's in store for the company?
So we really set up 2022 with a whole host of accomplishments that I'm really excited about, that put us in a very well-positioned 2023, which is a very data-rich year for us from a clinical perspective. As you know, we've initiated our phase 2 clinical trial in chronic lumbar disc disease. It's a 99-patient study. It's prospective, randomized, double-blinded, placebo-controlled, gold standard, best of its kind in terms of an FDA trial. And we have safety data readout that's coming at the end of March or the beginning of April. So that's going to be a very meaningful event for our company. That's really going to enable the acceleration of the balance of our enrollment. So we're going to have a safety profile data readout for our sentinel patients that have already been enrolled and treated. So now we're going to be able to, once we get through the safety board, that's going to review it, if we get the green light, will be able to accelerate the balance of our 99 patient enrollment. It'll also obviously validate the safety profile of our product and our program approach. And more importantly, it'll enable us to really leverage this technology into other parts of the body. So what can we expect? We can expect IND announcements, approvals for other INDs in other parts of the body once the safety profile has been established. We should also expect investigator-initiated studies. We've identified over 15 clinical sites across the country with key opinion leaders. These key opinion leaders are enthusiastic about working with us and doing investigator-initiated studies in other parts of the body outside of the lumbar. So what does that mean? Cervical, hips, knees, shoulders, extremities. That's how leverageable this platform technology really is. So we should expect some investigator-initiated studies, more site enrollment announcements for some of the biggest hospital systems in the country with very prestigious key opinion leaders that are involved in some of these. We should expect some discussions around university collaborations and grants that we've established, non-dilutive financing back in 2022. So we've got 2 STTR grants, one with University of Washington, another with Temple University. One is for our spine program, the other is for polycystic ovarian syndrome in connection with our brown fat program. So we're going to be, really focused on this phase 2. We're going to hopefully get through this safety data readout. We're going to announce additional sites. We're going to talk about investigator-initiated studies, and we're going to start getting additional INDs approved, as well as accelerate our brown fat program as it relates to partnership opportunities, obesity, type 2.
Got it. And the way you see it, I mean, those, I guess kind of the advancements come first in the medical, like getting through FDA, things like that, and then worry about commercializing those things? Or is it simply like, okay, if we, get through this trial, then we know we can get X more funding for the next round?
Sure. Look, I think data is going to drive our ability to work with the capital markets, as well as non-dilutive financing with partnership opportunities. So I think this safety data is an important one. It's a huge readout, as well as some of the implications and roadmaps that we can go down to the extent that this is a positive outcome. I also think that, once we've enrolled our patients, which will take place over the course of this year, it's a 1-year follow-up. So we're only talking about the end of 2024 before we can see some results. And at that time, I believe if the data is good, we will have a tremendous amount of partnership opportunities with large strategics that we will intend to work with in connection with a phase 3, meaning funding a phase 3, having a milestone royalty agreement in place so that we will, prosecute certain regulatory hurdles and get and receive milestone payments in connection with those. So some of our competitors have done that. I think that's the natural course. I don't think that we will ultimately be, driving a commercialization plan. However, we could, but I just think that, we want to stick to what we're really good at, and that's molecular biology and bringing products through the regulatory pathway. So we will be open to explore all strategic alternatives, most likely having a strategic partner in connection with a phase 3.
Got it. Yeah, I mean, I think that's a good kind of outlook to have. Like, if we just focus on what we do best, on the medicine, on the therapies, on getting the data that we're looking for, then that the investors will come. They'll be looking for you. You don't even.
And just to be clear, it's one step before the next. We want to be tremendously focused on this phase 2 clinical trial. And to the extent that we're successful, we believe there is a binary event in terms of how valuation measures against where we are today. I can tell you right now, if we're successful in what we're doing because of the size of the market and how there are really no good options for this chronic lumbar disc disease, we will be, a much different company than an $11 million market cap company. So we look forward to that opportunity, and we've done a really good job of saying what we're going to do and then executing against it.
Yeah. So real quick, Lance, I gotta ask you before we wrap up. Do you have any like hot takes when it comes to stem cell? Like, what do you think is gonna, maybe in the next like couple decades? You think people are really prepared for, what all we're gonna be able to see? I'll tell you real quick my own thing that most interests me with stem cells. I'm 25, but I'm already kind of seeing my hairline go back a bit. I've been reading that people are like doing some sort of stem cell, getting it like injected in their scalp. Maybe it's not even stem cell. I think it might just be some sort of like blood transfusion. I don't know. They're getting shots to their, huh?
Yeah, it's PRP. But I think you're going to see it for a multitude of applications, and you're starting to see that now. That's not necessarily a futuristic view, but what we're going to see now are all of these trials that are currently in place start to yield some results. And those results will drive future funding to really pursue the commercialization of these products. And where I think they're going to be most applicable are musculoskeletal health. So things like chronic lumbar disc disease, pain in the knee, hips, joints, other avascular zones where the body really just can't repair and heal itself. So if we can show that there's a mechanism of action for remodeling those spaces and repairing and regenerating, then we're going to have a huge industry using stem cell therapy. I also think cancer is one of the areas that will continue to have a tremendous amount of capital resources dedicated to it. And we hope that we make tremendous strides, right, for humanity. I think that would be a tremendous opportunity for stem cells. And we're starting to see some really good results there as it relates to CAR T. But we're also seeing it related to men's health, to women's health, like you said, hairline issues, vision. We're starting to see cardiovascular health as well as neuro. So we're talking about Alzheimer's and dementia and Parkinson's and areas like that. So I think the roadmap has been somewhat established. Now we're going to sit back, we're going to do the work, we're going to execute against our plans, and we're going to really see what that data says. Because if that data is positive relative to some of the pharmacological solutions or other standards of care, you're going to see this industry really blow up.
Yeah, I mean, I think it's incredible, looking broadly, just in biotech or just in business in general right now, looking at like where are the biggest opportunities in emerging markets. Like, I don't know if there's a bigger one than stem cell research. I mean, I guess AI tech, if you're looking at strictly tech, it's like AI and stem cell. Like, these are like two of the biggest things to me. So it's awesome. It's been awesome having you on today, talking with a company that's doing stem cell, an expert with us, Lance Alstott. Anything else that we have not gotten to today, Lance, that you want to discuss?
No, I would just encourage everybody to keep our ticker on their board and to see what our catalysts are that we've just talked about. We will hit those catalysts. We'll continue to move the needle and execute against our plan. And we really appreciate being invited on the show, Aaron. It was really great to meet you.
Yeah, of course. You too, Lance. I got to get you back on anytime I need an expert, expert to come talk about stem cell, talk about what's going on in biotech or field goal kicking.
Would love to come back and talk about all the above.
All right, awesome, Lance. Well, enjoy the rest of your Monday. Have a great week. Again, everybody, ticker BRTX. Lance, enjoy. All right, guys, let's go ahead and kick off. This is actually good timing, guys. It's almost 11:30. We're going to get straight into our normal Benzinga Live. Let's go ahead and play that intro. When we come back, we'll be talking some inflation preview, as well as we'll do a quick Super Bowl recap. We can talk about people's favorite commercials, whatnot. I did hit a few bets, not every bet that I placed, unfortunately. I also did something really silly after the game, betting-wise. I don't even know if I want to talk about it, but we can. And then, yeah, no stock market movers today. And so with that said, there's a chance we might end the show like a little bit early. So if there's anything you guys like stocks you want to talk about or things you want to get to, let's do it at the top half of the show. But alrighty, y'all, let's go ahead and roll that intro, get straight into, after that kick I'm in on. Yeah, I mean, as the host of the show, I don't think I can really say like if I plan on getting in that or not, or if I do, I'll tell you guys. But what I will say after talking to Lance, I realized, so I think in real time, I was like following STEM. I remember exactly like it was like 2010, probably like I don't know, I was probably like 13 or 14 years old. Just started kind of, in school. We were like, but I remember I had to write a paper about stem cell. Or maybe I didn't have to write a paper about stem cell. I had to write a paper in like my biology class. Chose to do it on stem cell. And I think I was just at that age where I was like researching it the first time. I was like so convinced. I was like, no, like you don't understand, Miss Suma, my like freshman year bio teacher. I was like, this is like the biggest deal in the world. Like if we're not all focused on this, like we're being dumb right now. Because it seemed like from what I was reading about at the time. And then I think like you realize like, okay, like people were writing about it when the first signs of it being of efficacy were being shown, and it's going to take years and years and years to have this research. And we talk about this all the time in investing, right? There's a way you can be too early, investing on certain things. So if you were buying like a bunch of stem cell stocks and stuff like back in like the mid 2000s or like 2010, sorry, or like 2015, and yet these companies like still have years and years and years of FDA trials, hoops they have to jump through before they can even start becoming profitable. There's a chance that you're too early. And I think like with different AI stocks, stuff like that, there's a lot of times when technology is very far down the road. But what I think right now is very interesting, and I don't think it's the case with stem cell anymore. I think we're already seeing it now become more prevalent, seeing it become more used. So at this point, I think you can start looking at different stem cell names, doing some due diligence, seeing, okay, which ones do you like for the future? And if you're bullish, that technology, personally, I'm not a bioscience guy. Science, I don't, what? Oh, okay. All right, we're in AB's hands now. Like we can do whatever we want. No, don't be sorry. All right. Sorry guys, hold on. Ugh. Joe Rogan talks a lot about stem cells. Yeah, yeah. Felt that way about hydrogen power. Yeah. So I think like you have to when something like that happens, when you have something like hydrogen power, something like stem cells, something like AI, where it seems like it's very far down the road, but it's very promising. Like the potential is there. It's like a huge addressable market. I think what you have to do is keep your research and due diligence kind of separate. Like understand why. Again, like let's just use stem cell and AI as examples. Like understand why stem cells have the potential like to be so big. It doesn't mean you have to go like read every single textbook about, biology and stem cells, but have some sort of basic understanding of like what makes this special compared to other, medical things offered or being developed out there. And then, stay up to date on what's going on with trials, all that stuff. So basically follow it from basically just the scientific advancement perspective. And then on the side or on the secondary, also be following it from like the money, finance, investing perspective. Because at the end of the day, like, and of course, what's going on the scientific side is going to drive investor interest and whatnot. But even if there are promising developments made year after year after year when it comes to stem cell or when it comes to AI, if the money's not following, right? If the companies aren't growing financially, you're going to need some like really big advancements or really big, promises being made to essentially drum up a lot of investor interest. So like I'd rather wait until let's go from stem cell to AI as an example. I'd rather wait till some of these AI companies start, like ChatGPT. Sure, it's really cool, but so say ChatGPT was a stock or OpenAI was a stock. It's not, it's a private company. You can buy Microsoft, whatever. I would almost rather wait that till OpenAI, I'm seeing some sort of like path to monetization. Like, okay, now they're charging $50 a buck enterprise plan, whatever it is, and understand financially somewhat of what that impact's gonna have. Because I think otherwise, it's hard to do. It's all about the globalist agenda. It could be the greatest things, but it leads to concussion. I don't really know. I mean, man, I think if stem cells show promise, I think people will be all on board, because I think at the end of the day, right, we all obviously are very like divided here in the United States and whatnot. We're not in the United States, just around the world in general right now. It feels like whatever. We all, have medical problems or know family members of medical problems and stuff. And so if stem cell comes out and it ends up, being able to fix back pain a lot more effectively than opiates, which by the way, I didn't say this to Lance. That is a great, if I were like the PR director of a company, like BioRestorative, you're talking about that stuff, like, look, our stem cell is a great way to get people off opiates. That'd be a great selling point to, get some extra funding from the government or for investors or whatever. But anyway, my point is basically, look, I don't care what your, political outlook is, agenda this, agenda that. If the science is there and it's helpful and it's better for curing back pain than what we have now, which isn't great. Basically, the whole medical big pharma system is kind of screwed up. I don't think anyone really enjoys it. Doesn't matter what side you're on. So all right, guys. So let's do a quick breakdown preview for the CPI report tomorrow. So the expectation right now, let me go ahead and get my Benzinga Pro pulled up, because we can also just do a any thoughts on LNG? Are you talking about Cheniere Energy specifically, or just liquefied natural gas? Because I'm pretty sure LNG is the ticker for Cheniere Energy. Crow. Excuse me. Wow. Holy cow. I didn't know we were moving higher on the SPY. Well, I guess we've been moving lower, actually, the past few minutes. I mean, tables have turned. I think you got to buy weakness in this market. Eventually, fads get broken. Yeah, and exactly. So Jay, then basically, so let's use AI, because this is a more recent example with the market. ChatGPT comes out, takes the internet by storm, becomes a sensation. These AI stocks run like crazy, right? The ticker AI up like 100% off not even its company, off a different company, because everyone's just so excited about AI. Problem is, it's now the stock goes up 100%, the company's market cap is up 100%, but has the company's revenue grown 100%? Well, it's expected to at least grow 100%, right? Because it's up 100, the stock's up 100%. The discounted free cash flow of the company is now worth 100% more than it was, a week ago. But when the fundamentals don't actually match that, for example, the pot companies, there was a lot to be made. Okay, this law's passed. Oh my God, let's go all buy these pot stocks. Problem is, those companies didn't really end up start making a bunch more money. Now, I don't even know what the hell AI this company does. I think, without looking into it just from my memory, I think it's more like AI robotics. And I understand, right? I'm not saying it's absolutely completely crazy that because now we've seen, how crazy good AI can be in like ChatGPT's sense, that this company also now looks more promising than it was a couple months ago before we ever saw ChatGPT. But at the end of the day, you got to ask yourself, like, is this company in the next year, 2 years, 3 years, going to be able to make X amount more money just because ChatGPT, a separate AI company, put out this like AI chatbot? I'd say no. However, the other flip side to it is I think right now in the past couple months, you've gotten a lot more bullish activity. You've gotten a lot more people willing to take on some speculative risk. So a growth company like AI may look a lot more attractive to just a normal investor right now than it was a couple months ago. So, I don't know. I mean, it's the AI stocks. I mean, there's a lot of stocks now that have tried to use the AI to run. BuzzFeed, of course, was the crazy one that ran a couple weeks ago, went up like more than 100% just because it announced that it was going to start using AI to start writing some content. Other AI stocks, I mean, I really do think, I'll go on the record here. I think this is a gross overreaction by the market on Google. If you take into consideration, I mean, Google's market cap has now been wiped out by more than $100 billion in the past week, all because Bard, its AI competitor, in an ad, I guess, missed an answer on a question, which, by the way, ChatGPT does all the damn time. I know ChatGPT is like pretty strong and really good, but I myself, I mean, this was a month ago, so maybe they fixed it now. But after the college national championship football game, I asked ChatGPT to write a short recap of the game, and it just got like everything about the game wrong, which is fine because I know it's not taking in like data, live data, whatever. But there's other cases. Someone can find it. Someone asked ChatGPT to like name every country in the world that starts with Z. And it said, like, there are no countries that start with Z. I don't know. Just all these things when there are Zimbabwe. So either way, I just don't think it's a big deal that Google's Bard missed a question on a thing because it's AI technology. Kind of the whole point of AI and machine learning is that it, like, makes mistakes, gets better, gets stronger. And then, the other thing that I think the more realistic part of it is just that Google has now spent billions and billions of dollars throughout the past like 2 decades on AI technology and past 15 years or so. And to look behind, I guess, OpenAI, which the flip side of that is, I guess, OpenAI is obviously specifically only AI, focused 100% on AI, whereas Google is a big business that has a bunch of different aspects to it. Of course, you have Google Pixel, you have Google search engine, you have YouTube, and you have its AI department, which it's not probably as focused on as the other departments that it actually makes its money on. So OpenAI has the advantage of being able to focus on AI completely. And now Microsoft has a lot of exposure to OpenAI, may get part of kind of that first mover advantage that OpenAI is looking like it has right now. So I understand that Google's stock is getting a hit, but I still think 10%, I think over $100 billion worth of the company wiped out is an overreaction. And for a long-term outlook, I wouldn't mind owning Google here because either two things are going to happen. Two things are going to happen with Google when it comes to AI technology. Either A, because Google is a smart company and a big company and it has a lot of money, it's going to spend enough of its resources, both cash and just, labor, whatever, researching AI, using technology essentially to catch up with competitors over time if it needs to. I'm not saying that Google is going to be able to do everything OpenAI is in a year or whatever, but I'm saying as AI technology develops, Google will bridge that gap between itself and competitors. That's one thing, or there's one of two things that's going to happen with Google. That, or the second thing is that after a period of time, Google will realize that it's behind other, people when it comes to AI, that it has other parts of the business that it makes money with. Again, YouTube, Google, the search engine, Google Pixel, all these things, and say, okay, hey, let's not. I don't think Google's ever gonna like not be in AI at all, though. So I think more realistically, the first scenario is what we're gonna see. That if there is any big gap between other competitors in AI and Google, over time we will just see that gap close. I don't think we're gonna be put in a position where Google's all of a sudden left behind in the dust. And I mean, I could be completely wrong, right? Could be BlackBerry. BlackBerry will look to be way ahead of Apple and other phone companies, but I think in today's world, I think with how big Google is, it's just it would be completely. I just don't foresee a future in which Google spends billions and billions of dollars on AI technology and can't get up to speed with OpenAI or other companies. I really don't. And again, I could be completely wrong, and that could be a big lesson for me to learn that even the biggest companies, even the quote unquote smartest companies, can kind of fall off, for lack of a better term. So I do still think, and for me, as a long-term investor, someone who's just buying shit for my like long-term retirement IRAs and stuff, I would rather get exposure here to AI through Microsoft or Google, just because I think kind of, at least right now with the latest fad with ChatGPT and stuff, I feel like you've missed the opportunity now to find some of these like really small AI technology companies that could like blow up or potentially get bought out. Not miss your opportunity, but just that I bet they're already probably up. Oh, crows say natural gas. Generally, I like natty gas right here. Like to buy some. I might buy some. Look at this. I like the way that chart looks. Adding more Boyle. Yeah, I mean, I don't know. I think the leverage ETFs scare me with natty gas just because natty gas is already very volatile. So to then turn that volatility, make it from a already super volatile asset to times 3. But all right. Shall we talk some CPI inflation? Inflation. But alrighty, y'all. So CPI data tomorrow. The expectation is for inflation to come in at 6.2% year over year. That would be another 0.3% lower than what it was the previous month. So the expectation is for inflation to fall. I think it's really important to keep in mind kind of exactly what's expected in the market so that way when we talk about, all right, because the expectation is for inflation to keep falling. If the number comes in higher than expected than 6.2, I don't think it will. The market will most likely react negatively to that right off the bat. But say the number comes in at like 6.3, just like 0.1% higher, that will still show month over month drop in inflation. And that's what the key is here. I think the key is that if we see that the trend of inflation falling continues, then the market will respond well. CPI setup just got a bit more difficult with the run up today. Yeah, I mean, I'm like bullish and I'm long here and I'm long SPY, whatever. I almost think it's like more worth if I was just gonna trade CPI tomorrow, it's almost more worth it to trade it to the downside. Just because at this point now, let's pull up like an hourly chart here on this or a daily chart on the SPY. I mean, you can really see past couple weeks have been pretty strong. Yeah, let me know in the chat how you guys are planning on playing CPI if you are. Rashad Lewis looking at INPX. We can, what we should do a segment this week on like the top shorted stocks right now because they change a lot. I mean, you have your classic like right now. I think, like Bed Bath and Beyond, like whatever. Like a lot of these like stocks are up there, but it does change a lot. Make that annual 10,000% run. What is that good? So if you put in a 10,000% run, does that mean if you put in $1, you would make $10,000? So I'm down for that. Crow saying better off waiting for the squeeze and trading it then. I don't know, because the problem there, the problem with that, Crow, is, I mean, like if you look at when GameStop had its big short squeeze, it's impossible to time exactly when the top of that squeeze is because there's going to be a lot of people once it goes up 100% thinking, all right, here's my time. I can buy puts, right? GameStop went from $4 to $8. All right, I can buy puts. All right, now I went to $12. All right, well, now it's getting like pretty crazy. All right, next thing you know, it's at $40. All right, now it's up 1,000% in a week. All right, I'm definitely buying puts now. All right, next thing you know, it's from 40 to 80. Next thing you know, it's at 120. More people start buying puts. So when are you going to buy puts on a stock like this? Are you going to wait till, I guess what's smart is you should just wait for it to drop like another, 30%. But if it's still elevated a bunch, then short. I guess I don't really know, but I just know that, I think it ends up seeming a lot easier than it ends up being. I think the CPI is at all flat. Market rips up. Data dependent becomes the words of the day, and shorts have to cover again like last rally. Short squeeze are over for now. Carvana, Bed Bath & Beyond, AMC, Beyond. Yeah, I don't know. We shall see. Crow's asking, how do you like Detroit life? I like it. Were you always there? No. I was in St. Louis, Missouri, so not too different, honestly, just in the Midwest. But yeah, I like Detroit. It's you can see it's nice and sunny. Weather's gonna start warming up here. Yeah, you all gotta come visit. Maybe we'll do a Benzinga live in person, live audience. Let me know, Crow. Another quick check on the overall market. The Qs, Invesco QQQ, Trust Series 1 up about 1.4% today. Looking at the 2-minute chart, we are just off the high of days, or the high of the day. Looks like in the past like 10 minutes or so, we've come off that slightly, but tech is leading today. Your S&P 500 is up a little bit less than 1%. Your Dow Industrial Average is up about the same as the SPY. Let's look at XLE Energy red today. Wow, interesting. XLF up. XBI Biotech up as well. How are home builders doing? That's something we got to get a home builder on the show soon. Talk about what's going on. Looking at Nail here. Direction daily home builders 3 times leverage trade. Let's check in on we haven't looked at Alibaba stock in a while. Trading at 105. Not too bad for Mr. Alibaba. But alrighty, y'all, just a quick rundown for the programming this week. So tomorrow, of course, CPI day. We'll be live pre-market prep in the morning. Of course, Dennis and Joel will be trading that number all here on Benzinga live at 11:30. David Green from Wall Street Global Trading Academy will be making his long-awaited return tomorrow. So we'll be trading the CPI as well as some other special guests joining us. But today, and I think throughout the week, there will be no stock market movers. So with that said, we started the show a little bit early today, so I think we will be wrapping up a little bit early. We're gonna be doing. I've got some Super Bowl leftovers. I gotta tend to. So, again, I hope everyone, if you are trading the CPI report tomorrow, just remember, basically a binary event coin flip. You're not, unless you've got a leak or anything, like you're probably not gonna have an edge. So I wouldn't treat any trade that you're making on the CPI report as anything different than something that you would have, placed on a Super Bowl bet last night. Oh, you're in Toronto? Yeah, I mean, I don't know. I think we're only about like a 4-hour drive from Toronto. We'll do a U.S. Canada Benzinga meetup. Sounds good to me. Other economic things on the calendar this week. I know there was a couple other. I mean, obviously the CPI report is going to be the big one. And honestly, like I think you could very well make the argument that this is the biggest one over the past like year or so, because now we've kind of had this bull market reestablished. There's so much at stake to where if inflation shows that it's picking back up, we just go straight back down and basically give up all our gains. But the flip side is that if it shows that it continues falling because we've already now gotten kind of into this bull market, I think that it just encourages a lot more buying, and like we could see it really, really rip from here. So I wouldn't be surprised that if, inflation shows that it fell in January, if it showed that it continued to fall by more than expected, so it comes in below 6.2% year over year, I would not be surprised to see the S&P 500 close up 4 or 5% tomorrow, maybe even more, which would be like a $20 move from here. So I might look at some, I might wait for the next big dip down and just buy some Buy some SPY call contracts. Looks like we aren't really going to get a dip down. Expiring February 14th. Say you wanted some 430 calls, run you about 2 cents right now. I'd actually go down to like the 425s. I'd get 425, so the SPY would have to go up like 3.22% from here. Probably ain't going to happen, but who knows? If we get a big dip again, I'll look at them. But alrighty, y'all. We'll be back tomorrow, normal time again, everything. So please smash the like if you have not already. Again, no stock market movers, but we'll be back tomorrow, 11:30 a.m. Eastern. Peace and love. Good luck with anyone trading CPI. And shout out to BioRestorative, who joined us today. All access, Lance Alstott. Shout out. Smash the like for Lance. Smash the like for our producers. Smash the like for Kansas City Chiefs, who won the Super Bowl and won me some money last night. Later, y'all.
This